Hey guys, welcome back. Today we have another great SPAC stock for you with a lot of upside potential that you may want to buy now. Of course, remember this is a SPAC stock, so it's still considered a speculative investment. And lastly, full disclaimer, this is just my opinion and not financial advice, so please do your own further research. With that said, let's get into it. Today's SPAC is TPG Pace Tech Opportunity Corp, PACE. This is another SPAC trade that's a bit different from our typical SPAC strategies to make money. If you haven't watched it yet, please check out our video above on how to trade SPAC stocks. As you recall, we usually don't buy SPAC stocks after it has made a deal announcement. We usually sell because the price has gone up, but this one's a bit different, and let me explain why. On Friday, a deal was announced that Pace would acquire Nerdy, a leading online e-learning platform. However, strangely, the stock barely moved. In fact, it went down from 11 to 10.50, and then on Monday it started to gain a little traction, closing at 10.80. But yesterday it went down and ended the day at 10.63. Thus, investors must not like the deal, or again, it could be selling pressures from hedge funds, or that everyone is still focused on GameStop and other short names. In any case, we can't assume it's a bad deal, and we must look deeper into Nerdy's business to determine if there's a buy opportunity here. So first, let's take a look at TPG Pace and see who they are. In September, TPG raised $450 million to acquire a technology company. TPG is a sponsor of the SPAC. They are a huge and very famous global investment fund with approximately $85 billion in assets under management and 14 offices around the world. Since 2011, they have taken over 56 companies public, completed 5 SPAC deals, and have a long history of major investments in successful tech, e-commerce, and edtech companies. For example, as you can see, they have been investors in popular names such as Airbnb, Box, Spotify, Uber, Zscaler, etc. More recently, in December, their other SPAC, TGPY, acquired EV charging solution company EVBox. This SPAC is performing pretty well and is trading at around $28 today. Hence, needless to say, TPG knows what they're doing and is a great match to bring Nerdy to the next level. Next, let's take a look at Nerdy. Nerdy is the leading direct-to-consumer, curated gig economy platform for live online learning. Led by their flagship business, Varsity Tutors, they are leveraging their unique platform using AI to deliver a more personalized and adaptive live learning program. Here's a quick video promo of their company.
Education has been shifting online, but it was a bit of a laggard compared to other consumer categories as it relates to online adoption. Nerdy is a purpose-driven company enabling access to high-quality instruction and transforming how people learn through technology. One of the things that has happened during COVID is that there's been a significant acceleration in online adoption. Consumers now realize that they don't have to drive to a strip mall. They don't have to drive to a corporate office park. They can go online, seek out an exceptional experience, and it's just a click away. This is just about as fragmented of a market as you can possibly find. There's thousands of tutoring companies out there. There's millions of independent tutors. And as industries shift from offline to online, we think we're particularly well positioned to disproportionately benefit from that shift. We operate the leading gig economy platform for learning and live instruction. And at the core of what we do is connect the right expert to the right learner based on their specific needs. We helped deliver over 5 million hours of live instruction in 2020, and we have focused maniacally on building an exceptional customer experience that allows anybody to get the help they need in any subject, anywhere, and at any time. We've now brought together multiple different learning formats into a single comprehensive learning destination. Varsity Tutors is the largest online tutoring platform in the United States. We started out with one-on-one instruction, figured out how to deliver it online at scale and enhance it in ways that previously weren't possible. In addition to one-on-one tutoring, we also have small group classes where you can learn with 5 to 25 people. It's a lower price point, it's more social, it's incredibly collaborative. We've introduced large group classes. These are often taught by celebrity instructors, and we offer them for free. We have astronauts, actors, wildlife experts, and anywhere from 500 to even 50,000 learners will join these classes. We also have adaptive self-study. It's a machine learning-based platform that allows us to assess and reassess learners in a personalized way.
Next, as that was a pretty good detailed promo video on Nerdy, I'll just quickly recap some of the key offerings. Their main core business is online learning. Because of the pandemic, they quickly shifted to 100% online, and within that, they offer one-on-one courses, small group classes, live large groups, and self-study programs. But what is really smart is that they have a lot of free classes. With over 3 million hours of free live online classes and over 200,000 prep and practice tools, it's no wonder that they have over 500,000 students utilizing their free services. This will definitely help them build their brand and grow a database of potential customers who may convert to paying users later. Next, in looking at their competitive advantage, Nerdy offers a unique learning experience by utilizing AI to improve the learning and interaction experience. This starts off with their main interface, which offers a platform allowing for a collaborative workspace, two-way videos, live help, and other integrated features. Think of it as a Slack, Zoom, or Asana, but for online learning. Then there's an adaptive learning layer, which assesses your learning behavior and performance to continue to curate the best learning curriculum for you. Next, there's the matching layer, which makes sure that you're being matched with the right expert. I know this is absolutely necessary because having the right teacher is very important. Everyone learns differently, and having the right teacher with the right personality makes the biggest difference. This seems to really work as they have an average user feedback rating of 4.9 out of 5. Lastly, there's a final curation layer, which uses learning interaction data to identify the best experts/teachers. They have over 900,000 applicants, and so since they want to be the best, they will only select the best experts. Next, in looking at their competitors, there's no real direct competitors that offers full online live tutoring and learning services like Nerdy. For example, Chegg mostly offers online, digital, and physical textbook rentals, some online tutoring, and other services. Udemy, Coursera, etc. are mostly recorded online course services for continuing education and special niches. And then your local Kumon, etc. are primarily brick and mortar in-person learning for K-12. Thus, Nerdy is truly unique by offering a wide selection of live online tutoring for individuals and group sessions for every age group from K-12, undergrad, postgrad, professionals, and continuing education students. Moreover, they're doing a really great job. If we look at Trustpilot reviews, Varsity Tutor, which is Nerdy's brand, has a 4.9 rating with over 3,500 reviews, as compared to Chegg, who has a really bad 1.3 rating with only 1,200 reviews. Thus, Nerdy must have a really good product that their customers really love. Next, let's take a look at their operational and financial performance. For 2020, they will likely end the year with around $106 million in revenue, which is up 16% year over year. However, there's a little distortion in this number because they only recently shifted to 100% online in the second half of 2020. Thus, if we look at Q3 and Q4 year over year comparison, they are up 71% and 87% respectively. As for 2021 and 2023 forecasts, they currently have about 87,000 paid active users and expect to grow about 14% on average, with revenue growing about 30% plus every year. They expect to become profitable in 2023. Although I prefer them to already be profitable, this is expected of higher growth tech companies. Thus, a better indicator is to compare their growth to other growth companies. Here, we see that for 2022, they expect revenue growth of 43%, which is higher than the group average, higher than Chegg and other tech companies. If we look at gross margin, they expect it to be around 71%, which is slightly below the average, but we should see this increase as they scale their business. But more importantly is what customers think of their products. Here, Nerdy has a Net Promoter Score of 68. A Net Promoter Score is a ranking of how likely a customer will recommend your product. Thus, we see that they are beating strong brands such as Amazon and is in line with Netflix. That really tells us that they have a really good product, as I love both Amazon and Netflix. Next, in looking at this deal and Nerdy's valuation, we see that they're being valued at $1.7 billion and will get a cash infusion of $300 million, giving them an enterprise value of roughly $1.4 billion. At that level, they're trading at 7.1 times 2022 sales. But this doesn't tell us much unless we have something to compare it to. Here, their main competitor is Chegg. So in looking at Chegg, we see that Nerdy is trading at a 50% discount as compared to Chegg and other tech companies. Thus, Nerdy does seem pretty cheap at these levels. Next, and what I found even more important and made me really believe in this company's potential, is the management team, its board members, and its key investors. Their management team is led by seasoned veterans from many large well-known companies such as Amazon, P&G, PwC, and McKinsey. Their board include executives from Expedia, TCV, Learning Capital, and Amazon. And then if we look at the investors, we see that TCV and Learn Capital, which is owned by the Chan Zuckerberg Initiative, have invested in Nerdy. TCV, as you can see, have invested in high-growth tech companies including Airbnb, Netflix, Spotify, Zillow, and Peloton. Learning Capital has also invested in notable education tech companies such as Udemy, Coursera, and VipKids. Thus, there's a wealth of expert thought leaders and influential players who believe in this company and will likely help it grow even faster. For these reasons alone, I believe Nerdy will do very well as a company. Lastly, let's take a look at the technical to find a good entry price. Currently, there's a lot of resistance at $12.40 with really good support at $10.40. It last traded around $10.60 yesterday. Thus, I think it's very cheap at this level and is a good buy here. I think people are also sleeping on this stock as it has a lot of potential and can become a really good long-term investment. Full disclaimer, I bought this stock on Monday and will look to buy more if it continues to go down further. That's all for today. If you find this video helpful, please hit the like button. Also comment below and let me know what you think of this Spac and or Nerdy. And as always, this is just my opinion, so please do your own further research. Happy trading, and please don't forget to subscribe.